Did you know that there's a simple method the wealthiest families have been using for generations to build and protect their wealth, and that you can easily implement this method into your financial planning? Hi, I'm Gregory Rozdeba, the CEO of Dundas Life. For the past few years, I've been helping Canadians protect their families and grow their wealth with smart financial planning. For years, we've been told to max out our RRSPs, contribute to TFSAs, and hope for the best. But these traditional methods have their limits. They're subject to market volatility, such as the ups and the downs of the stock market, which can be both risky and unpredictable. They're often subject to heavy capital gains taxes down the line, meaning a significant portion of your hard-earned gains goes to the government. Your money may be locked away with restrictions on when and how you can access it, with inflation generally reducing the value of your savings. Today, we're exploring an often misunderstood financial concept: overfunded life insurance. We'll discuss its many benefits, including tax advantages, liquidity, control, growth potential, and legacy planning, all available in one comprehensive strategy. Whether you're an entrepreneur growing your business, a business owner looking for tax-efficient strategies, an experienced investor looking to diversify, or just beginning your wealth-building journey, then this video is for you. Make sure you hit that subscribe button and the notification bell so you don't miss any of our future videos. Now, let's get started. First, we'll break down what overfunded life insurance actually is. Overfunded life insurance is a strategy that comes from overpaying your monthly premiums to your permanent life insurance policy. Most people think of life insurance simply as a death benefit, something that's paid out to your loved ones in the event of your passing. Taking care of your loved ones is an important element in financial planning, but there's so much more to it. When you pay into a traditional whole life insurance policy, a portion goes towards the death benefit, while a smaller portion goes to the cash value, which grows over time, often at a rate that barely keeps up with inflation. Think of it like a savings account combined with life insurance, but better. The extra money you put in helps your savings grow faster, and that's what makes the strategy so effective. Overfunded life insurance works differently. It's a specially designed whole life policy, ideally from a mutual insurance company, which is a key distinction. A mutual insurance company means you, the policyholder, are also a part owner of the company. This allows you to share in the company's profits through dividends. Although the dividends are not guaranteed, many mutual companies have consistently paid them to their policyholders for decades. Now let's talk about some key features that distinguish this cash value from other investment options. For one, there's tax-deferred growth. Your cash value grows without being subject to annual income taxes. This is unlike investments in the stock market, where you pay capital gains tax on any profits. With tax-deferred growth, your money compounds faster. Another feature is its tax-free access to funds. You can access your cash value through withdrawals and policy loans without paying taxes, which is a huge advantage over traditional retirement accounts. Imagine accessing your money whenever you need it for any purpose, such as a down payment on a house, a business opportunity, or education expenses without worrying about penalties or taxes. Even if you borrow against your policy, the entire cash value amount continues to earn interest and dividends, as if you haven't touched it. This is called uninterrupted compounding, where your money continues to work for you even while you're using a portion of it. This is a core principle of wealth building, maximizing the efficiency of your money, and a key advantage of overfunded life insurance. Let's say you have $100,000 in cash value, and you take out a policy loan for $20,000. You earn interest and dividends on the entire $100,000, not just the $80,000 that's remaining. Depending on your province in Canada, your cash value may also be protected from creditors. This can provide significant peace of mind, especially for business owners and entrepreneurs who may have higher levels of personal or business liability. Next, let's talk about leverage and liquidity. Overfunded life insurance gives you both, and that's a powerful combination. You can borrow against your cash value to fund other investments, real estate, business ventures, you name it, without interrupting the growth of your policy. Remember that uninterrupted compounding, it's still working for you, even while you're using the borrowed money to build wealth elsewhere. You're essentially using the same dollar in multiple places at the same time, leveraging the full extent of the policy. You can also have relatively quick access to cash when you need it. We're talking about 24 to 48 hours in many cases. This provides significant advantages when compared to investing in assets that are hard to sell quickly, like real estate. The liquidity gives you the freedom to take advantage of opportunities as they arise, making the most of your cash value. Let's look at a real-world example. Imagine you want to invest in rental properties. Instead of taking out a traditional mortgage from a bank with strict repayment terms, you could borrow against your life insurance policy. The interest rate on a policy loan is often lower than a traditional mortgage, and the repayment terms are typically more flexible. The rent from the property could then be used to repay the policy loan, creating a self-financing system. This is the core concept of infinite banking, or becoming your own bank. You're essentially using your policy as your own personal line of credit. You're in control of the terms, and you're benefiting from the growth of both your policy and your real estate investment. The key here is that you can grow your cash value and leverage it for other investments. This powerful concept allows you to maximize your building of wealth. Now, you might be wondering, can you use overfunded life insurance to fund your retirement? For many Canadians, the thought of retirement brings a mix of excitement and anxiety. Will I have enough money? How will I manage taxes? These are legitimate concerns, and traditional retirement planning often doesn't provide all the answers. Overfunded life insurance can indeed be a useful tool for retirement planning. Remember, those tax-free withdrawals and loans, they allow you to access your cash value in retirement without paying income taxes, up to the cost basis for withdrawals. Compare that to your RRSP, where every distribution is taxed at the regular income. That's a massive difference. You also have incredible flexibility. You can adjust your withdrawals based on your needs and your tax situation in any given year. If tax rates are high one year, you might choose to take less from your RRSP and more from your life insurance policy. If tax rates are low, you might do the opposite. This gives you a level of control that you don't have with traditional retirement accounts. Your death benefit also remains unchanged. If you borrow from your cash value, even if you've used a significant portion of your cash value during retirement, your loved ones will still receive a tax-free death benefit, providing a lasting legacy. This ensures that your obligations are taken care of even after you're gone. It's important to note that your death benefit will only remain unimpacted if you repay all of your loans. If you don't, your family will still receive the death benefit, minus the cash value you borrowed. Beyond the wealth-building aspects, overfunded life insurance also provides invaluable protection and peace of mind. Let's cover a few factors embedded into your policy to make sure you get the most out of it. At its core, life insurance is used to protect your loved ones. The death benefit is mainly there to protect your family's future. It replaces your income, covers debts, and ensures your obligations are taken care of, no matter what. This is the fundamental purpose of life insurance, and it's an essential part of your overfunded insurance policy. We've already touched on creditor protection, but it's worth reiterating. In many provinces, your cash value is shielded from creditors, providing a safety net for your assets. This is particularly important for business owners and professionals who may be exposed to higher levels of liability. While the exact growth rate depends on the insurance company's performance and dividend payments, there's a guaranteed minimum growth rate, providing a level of certainty that you won't find in the stock market. This provides a solid foundation for your wealth accumulation. You know that your cash value will grow at least at a certain rate, regardless of market fluctuation. Now, you might be thinking that this sounds too good to be true, or that the cost of life insurance won't pay off in the end. These are valid concerns, which is why it's important to be fully informed of your purchase decision. Remember that overfunded life insurance is a long-term strategy. The benefits accumulate over time. The earlier you start, the more powerful the compounding becomes. It's not just about instant wealth, it's about building a solid financial foundation for the future. And while there are costs associated with life insurance, the long-term benefits, including tax advantages and potential growth, can often outweigh those costs. So let's recap everything we've covered today. Overfunded life insurance offers tax-deferred growth and tax-free access to your cash value, uninterrupted compounding, creditor protection, and a guaranteed death benefit. It's a powerful tool for wealth accumulation, retirement planning, and legacy building. This is a versatile strategy that can be adapted to a wide range of financial goals and circumstances. It's also a way to take control of your financial future and build a legacy for generations to come. Ready to explore overfunded life insurance? and see how it can fit into your financial plan? Book a free consultation with one of our experts at Dundas Life. Click the link in the description below to schedule your call. If you found this video helpful, don't forget to like and subscribe to our channel, and share it with anyone who might benefit from this information. Thanks for watching, and I'll see you in the next video.